Hello everyone. Now it's time for big data. Let me first introduce Béatrice Guedj, Head of Innovation and Research at Swiss Life Asset Managers France, and Robert Stassen, Head of Analytics Europe at CoStar.
Let me first very quickly explain what we do at CoStar Analytics. We use the CoStar product, which has information about so many buildings, and we do two things. We monitor the market for you. We do that for markets and sub-markets and write reports. Reports are in the product, so they're all based on live data. So what you download today is going to be different tomorrow. What we also do is what we call customized analytics, and I live in Marylebone, so I looked at the Marylebone sub-market and I choose all the office buildings with 4 or 5-star quality. And I now have a portfolio that I can analyze. And our analysts use this to look for trends in the markets and feed them back to you. You probably recognize this. We have 70.
Yes, we do.
we are working very hard. We are fully active in the US, Canada, and the UK. We're coming to France and all of France, as you can see. But it's hard work, and we're working very hard to get there. And that brings me to my first chart. And I use this one from Preqin, because CoStar has a partnership with Preqin. For those who do not know Preqin, Preqin collects data about fundraising for private real estate funds. And what we do is we connect those funds and the money to buildings. And then you can analyze the portfolios of these funds. And what I found very interesting from these data from Preqin was that for the first time ever, the value-added strategies have the most money to spend. That has never happened before. And probably that has to do with the fastly rising interest rates, as we have seen, because if interest rates are higher, that is more expensive, and that will affect opportunistic funds like the private equity funds. No surprise that they're down. And also, if bonds portfolios go down, an equity portfolio goes down, and we know that real estate sometimes is a bit slow with their revaluations, then as a percentage, suddenly you are over-allocated to real estate. So the new money that you get as a pension fund might go to bonds and equities instead. So that explains why probably core is going down a little bit. But it's important to realize that that does not apply to Asian pension funds, because they are still under-allocated to real estate, core real estate. So don't be surprised that they will be buying some core assets going forward. And then finally, my message from this chart is actually that as an industry, we probably have to work a little bit harder for our money and execute value-add strategies.
Béatrice, maybe, as with your researcher hat, what do you make of this?
I want to make a point before commenting the charts, is that back in 2012, I was working on the UK market, helping the acquisition team to make acquisition in London. And basically, I was using CoStar. Okay, so this was before I had gray hair. And I was a fan of CoStar because sitting in Paris, you know, I didn't have to visit the building, but I know many, many things about the buildings, from technical key attributes to, for example, key information regarding the investment, the rotation of the asset, leasing information regarding each building, each floor, and this for the overall market, at least in London. So I was a fan, and I didn't know that 10 years after, I will sit with the head of research at CoStar. Yeah. So this is for the beginning, the introduction. You mentioned the fact that you have a partnership with Preqin. As we said, as an asset manager at Swiss Life, Preqin information is usually gold. So we can see here that the equity raised it's much more interesting, sorry, I would say, that any kind of a investor survey, because actions speak louder than words, and basically it means where people are ready to go. So it gives a precise idea about changing strategies and risk profile over time, and of course, given the current market's condition. So in the present case, it provides an interesting read, I would say, of the differences in terms of strategies to be deployed in North America, also compared to Europe. I will only comment the trends related to value-add and opportunistic strategies, the red and yellow, as you mentioned, Philippe. The most striking feature for me is the difference in volume raised for value-add and opportunity strategic is 3 times in North America than in Europe. Okay, so that means a lot. And also, over time, because I'm a researcher and I look at the long-term trend, over time, both strategy in North America have been more steady, okay, than in Europe. So we could argue that this is related to the size of the market, the maturity of the market. This is true, but I would like to elaborate a bit. We know that US pension funds have an exposure to real estate around 12%, okay? In Europe, European pension funds have an exposure around 11%, and in France, an exposure between 6 and 7%. So for, I would say, the three continents, real estate is a pillar within the strategic asset allocation. Okay, we all know that. This is for the diversification effect. But the main difference with the, I would say, the North American players, Canadian and US, is that real estate sits also within what we call the tactical asset allocation bucket. Okay, this is very important, which means that North American player, okay, usually play the market timing much more often than European player. Okay, and having said that, it's true that we've been able to observe that for specific strategy, more specifically in Europe, North American players have probably been leaders, okay, converting offices to residential, for instance.
Thanks, Béatrice. But maybe to before covering the point you wanted to make of Paris versus London and New York, okay, these are pretty fresh data, but to share it with you, I think there is no fatality of the yellow lane being just below the level in the US. As I think at the coffee break, you might be able to see some of the people that are raising at the moment opportunistic capital for European investment. I hand it over to you if you want to do this Paris, London, New York comparison.
Yes, this is my my favorite slide because it compares.
I understand you. Really,
I live in London, so you can probably understand why. But it's it's a very good way to compare these three great big cities. And this is what we've done. We've looked at the vacancy rates, and we used the data from our colleagues at here in Paris, which is part of CoStar. And if you look at it just now, you would say, oh, London is doing best, despite Brexit. But you have to go behind the numbers to really understand what is happening here, and that's what we can do in CoStar. And it's interesting that in both London and Paris, in the CBD markets, you have vacancy rates below 3%. If you do the same in New York, and you go to Midtown or Southern Manhattan, then it's actually above average. So there's a big difference, and it kind of maybe also explains why some of the North American investors are more kind of negative about offices, because they don't have those ultra-tight CBD markets as we have them in our cities here in Europe. Another thing which makes kind of Paris a bit of an outlier is that when you do go to outer London or outer New York, then in the other markets, kind of the vacancy rates are all about average. Maybe a bit above, maybe a bit below. There's not much diversity there. But if you go to Paris, then you have a very big difference. Because if we go to the Premier Couronne and we go to Saint-Denis or Saint-Ouen, suddenly vacancies move up to 25%. That doesn't happen in the other markets. So that makes Paris kind of an outlier, which is quite interesting. And maybe that's also the reason why the government here is trying to convert these offices into multifamily and other use. So you have to look beyond, I would say, the headlines to understand data.
Just to mention, the office London market is about 25 million square meter. Okay, the Parisian market is about 56 million square meter, and New York is about 43 million square meter. So that makes a big difference. So to be honest, as a French, I like hearing that Paris is an outlier, because I believe that Paris is definitely an outlier. So in Paris, you mentioned it, like in London, vacancy rates have usually been very low compared to other submarkets. And Paris in a city has always been a magnet, both in terms of letting, but also investment activities. And I would say that Paris has reinforced its polarization, or yes, has been a kind of an anchor or its productivity since the global financial crisis, okay? People usually think that Paris has reinforced its position since the sanitary crisis. digging deeper into the data, we can show that that's not the case. Okay? Paris has been an outlier, okay, compared to other markets in France, Paris region, but also in Europe, okay, since the global financial crisis, and that's the big difference. And I would say that actually, if you dig deeper in terms of research and you try to explain the outperformance of the Parisian market, basically, they are based on 3 key factors. First, the infrastructure and the connectivity of the infrastructure. That's very important, but that's the same in London, okay? That's the same in New York. The second thing, and you mentioned it, is that we have an interesting mixtures here in Paris between residential, retail, hospitality, and offices. And basically, that's make a big difference because one famous American economist won the Nobel Prize to explain that. It says this is the kind of a first nature advantage of historical cities. Paul Krugman won a Nobel Prize for that. So that's very important because basically it produced what we call, in our jargon, positive externalities, okay, through the whole value chain. And finally, what is very important in Paris, is that Paris cluster innovation. So when people, and I would say that tourists or foreigners think about Paris, they think about fashion and love, okay? But from a research perspective, it's a different story, okay? Paris cluster innovation, if you look, for example, all the patents over time and the patent growth over time. And that's also a key advantage to foster those positive externalities between property sectors and between tenants over time.
Do you want to just go quickly through the last slide?
Yes, and let me say.
I'll go with my random questions.
Yeah. Just want to say, we at CoStar, we made London as big as Ile-de-France, and London still came out better. So I just want to say that. But no, this slide is we're at a real estate conference. We have to talk about yields. And that's what we've done. And we've seen something weird going on here because we just said London is doing better in vacancies and fundamentals. And we actually see London yields go up and we see New York yields coming down. But then you have to again look at the data. This is transaction yield, so what is actually sold. And there you see a big difference because in New York, only trophy assets, only good assets get sold. And if you average only that, you get a very low yield. So kind of looking forward is London and New York being very, I would say, forward-looking markets, as you said, Beatrice. Maybe we can learn from that as well. And that is that we might know that what we can sell a building in the Paris CBD for, but we might not know what that building in Saint-Denis would be worth. Maybe you can shed some light on that, Beatrice.
Yeah, 1 or 2 comments from you, Beatrice?
Yes, maybe 2 comments. We don't have such kind of a, let's say, profile or average transaction yield here. We usually refer to the benchmark, the prime yield. Okay, that's the main difference. And you mentioned the fall in prices, the downward adjustment in the UK, for example, as a kind of a leading market. You said that Paris is an outlier, so probably that my belief is that the downward adjustment won't be as severe as what we have observed so far in London, in the UK, and I would say also in New York, but that doesn't mean that there won't be a downward adjustment. But here what we tend to do, and I mean in France, but in continental Europe, is that we try to take the prime yield and we try to at least mentally appraise what we call the price of liquidity. And for example, in France, we move, or in Paris, Paris office market, we move from 2.8 to 3.25, 3.50, and of course, there is a lack of transaction. So it's a kind of a gut feel. You know, it's not like as powerful as your average transaction yield here, but we said that the price of liquidity here is basically between 15 to 20%. Okay, this is for the comment between what we do usually and the power of this specific, let's say, average transaction office yield.
One question, very simple answer in 2 words from you to wrap up. You talk about backward looking and possibly what can happen. What are today your current research topic? What are you working on today? Subsector, market, what is your key priority?
We're looking at the consolidation of big occupiers into new, better space and releasing more into the market and what will happen with that.
Beatrice?
So I will say for Swiss Life Asset Managers, I'm working, and I've been working for years, on the residential within the asset allocation, let's say, multi-asset portfolio. And it's true that we have a very strong conversion to build-to-rent, to alternative resi, going from healthcare to, for example, co-living. So we have a good and strong track record in Switzerland, and the idea for us is to be able to operate that in the French market.
Okay, things to cover in the next big up or big data session. Thanks to you, and maybe enjoy your coffee break.